Hello and welcome to NYSE Investment. This analysis is for Clarivate on the New York Stock Exchange as of 12th of July 2026 with a share price of $2.23. The full report is on donatien.ca. Statistically cheap, but a classic value trap. Flat to declining growth, heavy debt that barely covers its interest, and AI eating into its core. Cheap is not the same as buy. Valuation scores 70. On the numbers, this is a cheap stock. Clarivate trades around 6 times cash earnings, generates real free cash flow, and about 86% of its revenue is recurring subscriptions. If you screen purely for cheapness, it stands out. The whole question with a name like this is whether cheap is an opportunity or a warning, and here the rest of the picture argues it is a warning. Quality scores 42. The reason the stock is cheap is that the business is barely growing. Revenue has been flat to declining for 3 years, while it carries heavy debt. Its operating profit only covers its interest bill about half over, once you count the full charge. A cheap multiple on a shrinking, indebted business is the textbook value trap. The price can stay low or fall further for a long time. That is why our financial distress gate is flashing. On top of the debt, the long-run threat is structural. Free open access research and general-purpose AI search are chipping away at the value of paying for gated databases. There are real self-help levers. A recent divestiture should cut debt, and the company is repositioning around AI, so this is not a sell into the hole, but it is not a buy either. A hold. Too cheap and too self-helping to short, too troubled to own until the turnaround actually shows up in the numbers. Now, the other side of the ledger, flat to declining revenue for 3 years, heavy debt, interest barely covered, AI and open access erode the core databases, bear case $1.40, well below today. Now weigh the risk against the reward. The bull case is roughly 57% above today, the base case the most likely about 3%, and the bear case a fall of about 37%, so you are risking about 37 to make 57. So, our call on Clarivate on the New York Stock Exchange, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donatien Investment at donatien.ca. The link to the full report is in the notes below. Have a great day.